Hello, everybody, and welcome back to this episode of Derekinvests, the market mentality. Today, we are blessed to have Hans Albrecht with Crush the Premium with us today. He has managed a large portfolio of options, which I'll let him tell you about. And also, he is running his own business now, Crush the Premium. Crush the Premium is all about how to use options, how to use them effectively, efficiently. He talks about a lot of different strategies, and he also has a lot of opinions on the market, which I love. Something that I definitely want to get into today, Hans, is your thought on win ratio. You talk a lot about these guys talking about their win ratio. You had a great post. I love your discussion on it because so many people fall victim to this idea that it's about how often I win. And really, what a lot of people don't know, and I'm going to let you answer this and then have you add the introduction. What would you say the realistic, average win ratio is for a successful trader?
Well, I'd say, if you can win 50% of the time, you're doing not bad, actually. That's pretty
That's
good.
I
And
agree.
it doesn't sound that great. Yeah, it
No,
doesn't sound that great.
it's a beautiful thing that you're saying because oftentimes I say all the time the average amazing day trader, and there aren't many of them, contrary to what people believe. You're talking about 52%, 53%. I mean, that is and this person's amazing. And then you go online, they're like, oh, he's the 88% win ratio. I'm like, well, that has nothing to do with how much money he makes. So we're going to get into that a little bit. Hans, I'm going to let you talk about it. So for everyone out there, I have the QR code up for Hans and Crush the Premium. Just click on that right now. He has a Black Friday special going on where it is $4.97, effectively a 50% discount for this Black Friday event. So if you are interested in learning about options, different strategies, how to utilize them, and we're going to get into this more. I know Hans has recently been playing with MSTR. For those of you that don't know in the Bitcoin world what that is, we're going to talk a little bit about that because I find it to be a very interesting subject and a subject that gets into the idea of pyramid scheme, which if any of you follow Peter Schiff, you'll know what I mean by that. If it isn't, how it works. I want to get Hans' input on that. So Hans, that was the longest introduction ever. Is there anything you can add to it, or please do add to it?
Well, we're just getting to know each other, Derek. So there's so much to talk about. But thank you for the introduction. And by the way, with that deal, with that QR code, for anybody watching today, I'm going to throw in a couple of other things in there for free for listeners and watchers today. We'll throw in my Iron Condors course and some other cool stuff. So anyway, beyond that, the options world is really kind of where the action is these days. I mean, we have some stocks that are moving parabolically. I've said that today at one point. I tweeted and I said, I haven't seen this many parabolas in a long time, right? There are stocks doing this. And what that does in the options world, as we know, options kind of magnify everything in many ways. And so when you have a parabola in a stock and a chart that just basically does what MSTR did recently, and that's probably the most extreme example we've seen recently. We have coin, we have a few other things that have gone bananas, but MSTR, and then there's the leverage version of that, which is now, that is like on steroids. That's steroids on steroids. And so we've gone bananas. But what that does to the options market is it just throws everything in disarray. And we're seeing massive spreads. We're seeing implied volatility for listeners. You talk about options, so they'll be aware of implied volatility, which is just basically a fancy term for option pricing. Where are options priced? Are they low? Is the VIX 12? Is the VIX 40? Big difference there. And so we are seeing things explode in an unusual way, which is to the upside. So typically what happens out there is, and people may know this sort of inverse correlation, whereby as the S&P goes up, the VIX tends to come down. Now, we've had a little bit of a sticky VIX the last few months for a number of reasons surrounding elections, and now we have geopolitical risks out there. And there are things that are keeping the VIX up, but your typical relationship is market goes up, option pricing comes down because it's the fear gauge, right? Everyone starts to get more calm. We start to accept, markets are rallying, and in theory, at least, things are at peace in the world. And we're not seeing that much. But now this relationship has broken down in a number of stocks, and it isn't just in the coin complex where we are definitely seeing that. We are seeing upside calls get pushed to extremes we haven't seen in instruments in a very long time, but we're seeing it in many other stocks. Like I was looking at Reddit today, which is starting to go parabolic as well. And that upside skew compared to say 2 or 3 days ago is going bananas. And what that means, it can mean one of two things. It can mean, number one, that people are starting to gear up for a further move up. And we've seen this happen in AMC and GME. And what that can sometimes do is translate into a short squeeze, a gamma squeeze, as we call it, as people scramble to cover short options, dealers usually. Or it can signify exhaustion. So this is by no means a strict science. It is art and science.
I don't want to. I want to jump in real quick because you talked about a few things there that are really, really interesting. So the first thing I know people are going to gravitate to, I know people heard what you talked about GameStop, right? And you talked about AMC. Now we all know what fed those positions. I mean, the volatility, I don't know where it is recently. I don't follow it enough, but what led to those parabolic moves up and then the consequential crash that always follows moves like that. Now, that was a lot of pumping going on through Reddit. Let me ask you, you mentioned those, and then you mentioned them while you were discussing other positions, other stocks that were going parabolic right now as well. Do you think do you think some of the gamesmanship that kind of had GameStop and AMC moving the way they were, do you think some of that's going on in the broader market? Or were you just using those as examples because they had the same kind of price movement?
No, I think that's a very interesting point that you're alluding to. I do believe that some of that is bleeding into stocks, instruments, even indexes that wouldn't be sort of prone to that kind of thing happening.
Right.
And then that leads us to our next question. Why might that be happening? I don't know if you have any ideas on that, Derek, but how come suddenly this is happening in the options market?
That is a good question. I don't know that I mean, the only ideas I can have, the only thing I can say is that the barrier to entry when it comes to options or futures has been it has been lowered to such a substantial level that now where you have, what's his name? Roaring Kitty. You have got Roaring Kitty who was behind GameStop. You have these guys. There's not just one of him, right? He was the person that did it first. And so it was the most robust. I believe if someone asked me to guess as to how and why this is happening, my guess would be now that you realize it doesn't take much to buy options. It takes a lot to buy stock. Well, if you get yourself a community going of even 100,000 people, and if you start to realize that, options do move stocks. So everybody always assumes like the option price is following the stock, right? And now what people are starting to realize through people like yourself, Hans, through market makers that are helping them to understand the flows is that no, it can work the other way. It can go the other way. So if someone made me lay down money, I would say that these communities within communities are piling into this stuff and they're driving price. That would be my best guess.
Well, that's exactly it. And so I didn't mean to put you on the spot there, but you nailed it. You handled it fine. And I believe that's very true. I believe what's happening out there, I mean, we can quantify it. We've seen option volumes absolutely explode over the last 5 years. And even you can extend that few years past that. So when I started, I was a pro market maker for about 12 years. And I'll tell you what, when I started doing this in the mid 90s, late 90s, what we did in the option market making space and the volumes that we dealt with were a tiny little drop in the bucket. They were inconsequential to anything going on. That we were dwarfed by equity volumes.
Right.
What has happened is, and you may have heard this phrase thrown about, and I've been talking about this for a while, but some big personalities have gotten some credit for it lately. I believe that it used to be the tail. The options market was the tail. And the market was the dog. I believe that you could make a very good argument that the options market, the derivatives market, once you start adding everything up, I'm not just talking about listed options. There's over the counter. There is, you could consider leveraged ETFs. inverse ETFs. This is all synthetic gamma, right? So when we talk
Oh,
about gamma, those are
oh,
all
right.
included in that.
Right. I didn't even think about that fact because within themselves, those are derivatives as well. I never thought about the fact that that is also the options market. And it's funny that you use that expression, the tail wagging the dog, because I'll be honest, I've heard it a lot and I didn't really know what they were referencing. Because I just watched the markets and I did this long I had kind of a longer episode where I was talking about whether or not I felt I don't forget what the increase in options is, but it's like 800% or 1,000% over the last 5 years. And what I was trying to find out and what I was trying to look up and discover was whether or not I felt that that was the inclusion or the creation of more sophisticated investors, or whether or not it was just allowing more gamblers into the space. And they realize, hey, look, I have $300 to throw down too, So, and there's right. And I mean, that's the dream. That's why the lottery exists. So I was trying to figure out what I felt about that. And to be honest, it felt like sophistication. What I was reading, the people I was talking to, they seemed to understand what they were doing. And that's why what's been going on recently with all these parabolic moves, I thought this has to be these communities. They're piling in, they're pushing price. And it really stemmed from that. I said, they're pushing price. I don't know if they know it or if they do know it, or if they're just playing the options game. I don't know if they know they're the drivers of the market. My guess is they do. They know exactly what they're doing. And so it's great to hear that from you, because I have to be honest, I wasn't sure. It was just me making a call based on a few episodes I did.
Well, this is such a great conversation. I mean, we could go on for hours about this, but there's so many moving pieces here. So on the one hand, they are pushing price almost inadvertently. I mean, there is this sort of intention from a roaring kitty and from people in communities to get this going, but I don't think they realize the power that they had. So what happens is a gamma squeeze doesn't happen from a dealer getting offside in a position and taking off a very big position. It puts them in a precarious position. But what causes the gamma squeeze is some sort of spark that now gets momentum going. Then when it starts going through the strike that a dealer, whoever short these things, is short, once it gets through that strike, now it acts as an accelerant. So in and of itself, that volume just sits there. Once you get a reason for it to start to threaten these people, that's when it can start to spiral into momentum. And we call that an accelerant. It's like you throw a match on this thing and boom. And then guess what happens? All the guys in the community or wherever they are start buying the next strike. The dealers are already panicking buying. Now they're buying the next strike. The dealers raise the vol by 20, 30 points. It's not enough. They don't care. Retail doesn't care. They're buying the next strike, the next strike, the next strike. Before you know it, GME has gone from 15 to 65, 200, 250, and people have been decimated. And this is the power that is, it's almost incredible what's been created the last few years. And you're right, it does harken back to these days when people were sitting at home during COVID and going, I can't bet on sports. I can't go to the theater. I can't do so many things, but what I can do, I can start trading.
Right. I really, truly believe that is what started this. Now, Hans, let me throw something at you. So right now, I mean, really what you just told me, and correct me if I'm wrong, but what you really just kind of said to me was the ignorance of one group, not really even understanding what they're doing, is taking this other group that is very used to being able to kind of control the market, and now they're having to run with them. So you have this group.
Got it.
Is that right? Right. So
you got it. What is happening, what you're maybe starting to get to is that the retail trader in maybe funny. Everywhere, but in the option space used to be considered, and I'm just going to throw this term out here because I'm not trying to insult anybody, but it used to be considered the dumb money. Okay.
I use that term my whole life.
Dumb money. Okay. So all of us, all the retail guys were dumb money, and the institutional guys, those are the ones we're battling, and they have all the advantages and they have all the money. They have the upper hand. Well, guess what happened? The retail trader flipped the narrative and overpowered. And look at the option volumes. I mean, it's everywhere. And this is what's happening. And so now dealers are going, oh my goodness, we got to be aware of this.
Right. Well, it was interesting because again, it brought me back to this thought I was having all summer. I said, is this sophistication or is this gambling? And what you just told me, or kind of like, and it makes perfect sense to me. What you clarified is it's gambling, which then has to be chased by the sophisticated. So in essence, it just pushes. That is a very interesting. That is a very interesting way to look at it and a very interesting way to understand it. I know people will get that. So that is how that's working. Well, Hans, the interesting thing too, I think about this conversation was what you said before. It really was the equity markets used to be the drivers and the derivatives markets were the runoff. And I can tell that has flipped. I see it everywhere, right? Even in the futures market now. I mean, they created micros so that your average guy, I mean, if you're in the Dow micro, I mean, that's nothing. Anybody can afford to be there. If you can acquire the skill set, and really the skill set, as we talked about earlier, it's really money management. A lot of people think there's, I use this Bollinger, but like they talk about, I'm not a big indicator guy, so pardon me if you are, I don't know, but the Bollinger Band, the MGD, it's like, look, here's the thing. If you spot something that looks like it looked before and you think it's going to go in a particular direction, as long as you're out, the minute it makes no sense, it's not going to matter. You could do that 50 times, just like if you're playing Texas Hold'em. You just go, nope, I'm out. Nope, I'm out. Nope, I'm out. And then you go, I'm all in. Right. And so I think I think if you think back, 15 years ago, it just didn't work that way. I mean, it really wasn't. You watch the equity markets, and then if you were able to play in the options market, you just took your time and you waited. And it's still a very disciplined game, but it's interesting to hear how these communities are driving price. And as we spoke, I realized it. I did not know. I kind of had assumptions and you just led me down the path, but that's really cool. So listen, Hans, you're talking about something else really cool right now that everyone is interested in hearing about, and that's Bitcoin. So the Bitcoin world, and I talk a lot about the Bitcoin world too, but I think so MSTR, a lot of people have ideas about what it is and how it works. And I've seen and heard you talk about it. I know you just had an amazing win in there as well. I mean, Bitcoin really is up 40% in the last month. It went from 60 to 100 or something a day, right? So why don't you explain how MSTR works? Because there's a lot of talk out there that it's just a pyramid scheme and it will unwind as quick as it's kind of moved. And I would love to hear your thoughts on it.
Well, I think pyramid scheme is a big important term, and I think we can be sort of a little bit loosey goosey about it. It can apply to kind of the concept of different things that we're seeing out there. I don't think that's far fetched to call it something like that. It's I know that may be off putting to some people, but look, this company, they raise money, they buy more Bitcoin. They're incredibly overvalued based on the net asset value of their Bitcoin. It's worth 3 times. Well, I mean, it depends, right? It was 550 today. It got down to 380 by the end of the day. So it's anywhere from 3 to 4 times. It's worth 3 to 4 times the underlying value of the assets. Now, Michael Saylor, who's a genius salesperson, is going to spin stories about how they're issuing debt and convertibles, things like that, to try to get people in there, but the end result is usually buying more Bitcoin. So you have this world, and they're not the only ones doing it. You have this world that is continually raising money in various ways, including selling stock, and they're using that money to buy more Bitcoin. I mean, it's very you can see the cycle here, right? It works
easily.
It feeds itself. So
yep.
This, you have to wonder, there's got to be there's an end game here where this sort of starts to break down. I sort of joked this week on Twitter. I said, well, what happens when Michael Saylor owns all the Bitcoin? He literally has all the Bitcoin, and everyone goes, well, we don't really need Bitcoin anymore. Where's the bid at that point? So I'm not anti-Bitcoin. I have to say that I'm fairly agnostic on Bitcoin, but I like to make money. And so I'm playing this space, and I think it's interesting. And I buy into all this fiat currency being disrespected and going to zero. I've been talking about that for years. I think it, a lot of what's going on out there is quite awful. We're just increasingly relying on debt and money printing and stimulus and all this stuff, and we're throwing future generations under the bus, and just for the sake of raising asset prices. So
which is
I
only
think that all
benefiting
feeds into Bitcoin.
Right. I mean, so the other part of that, the other end of that statement, you said we're throwing future generations under the bus just to raise the value of assets. So you're doing, I mean, it's more than throwing them under the bus really at this point. If you're younger, I mean, if you're 40 or younger at this point and you're looking, say you haven't bought a home yet, and for whatever reason, you just weren't in a position to save. I mean, right now you're looking up at a skyscraper that there's no way you're ever going to touch, not working at a job. You're just never going to. So for me, that brings me to another concept that I've always believed in, which is affordability, right? In order to drive a bid, people have to be able to afford it. So I like the idea of Bitcoin for several reasons. I like the concept that it will take over fiat. I mean, I've talked about this a lot, and I'd like your opinion as well. What I've talked about a lot is when we went on to the gold standard, the US had about 15% of the world's gold reserves. By the time we went off, we had about 75%. We had to go off the gold standard because we had to continue running this global economy, and it had to expand with something, finite like gold, like a metal, a mineral, whatever. There's only so much. So they took the big risk. They went fiat. And now what we found is it just completely unshackles world governments. And I'm not saying all governments are bad, but they use that ability to funnel money to each other in massive ways with no regard for how it affects the people beneath them. I don't even know that they understand what they're doing. Ultimately, when I saw the U.S. currency and circulation increase by 50% in 2021, my head almost exploded because I thought, a 19-year-old in his first econ class could tell you exactly that it would create the situation that we're in now. There's no other end game. And so I like the story of Bitcoin because it puts shackles on governments, because you can mine this stuff, but it takes a lot of energy. So it's not endless, right? It can only be increased by so much per year. Yeah. So it's a currency that can continue to grow with a global economy, and it kind of handcuffs governments a bit in what they're doing. So I personally like the idea of Bitcoin. And as someone who talks with a lot of the younger generations, I have to say, throughout my time on this planet, which is only 45 years, I have definitely seen that younger generation tends to drive things, and they drive things because they're next. And right now where I live, I look around and I see retirees living better than they've ever lived when they worked. They have more money now than when they were working. And it's not to take anything from them, right? Like were brought in this world the same way I was. They were taught you do A, you do B, you do C, and they're just following through on that. And there's an amazing part of that too, which is like retirement isn't Archie Bunker. Like they're golfing, they're biking, they're living like, right? Like it's an amazing, you want your grandparents doing that. You don't want them like withering away in an old folks facility. At the same time, for their children and grandchildren to be trying to raise 3 kids in an apartment, there has to be some sort of there has to be a correction. And so my question to you, Hans, is I'm trying to reconcile the idea that we have asset classes way up here. So they either have to come down to affordability, period, because there's not, at some point there won't be a bid, or you do have to convert over to some sort of a Bitcoin crypto type world. How do you see that playing out? Is this generational? Does this happen quickly? Like, what do you see?
Well, and I think that's what you're seeing. I think that's what the meaning of Bitcoin continually going up is that it's almost forcing a reckoning. It's telling you it's an alarm bell in a sense, just like, the VIX or the MOVE index, which is rates volatility. When these things are elevated, they're telling you something's going on that needs to be kind of addressed or sorted out, or at least dealt with in a way that kind of kicks the can down the road, which seems to be what everybody's good at doing. Let's kick that debt can down the road. And so Bitcoin is almost like this sort of alarm system going off and saying, well, something's going on here. And I think it was somebody came out and said Bitcoin's going to $13 million. And Jim Bianco came out and said, you don't want to live in a world where Bitcoin's $13 million, because you're at that point, $1 million is going to buy you like a a Chevy, Chevy Nova car, like it's going to buy you, the world that we are going to live in at that point won't be that pleasant. So everybody's kind of rooting for Bitcoin 13 million. Be careful what you wish for, because that means a lot is in disarray at that point. So I worry about the signal that it's giving us, which I hope is no more than, hey, there's just a little bit too much money in the world and we can correct that in some way. But we've seen that the powers that be, as you say, these people living like Caesar, does Nancy Pelosi's house have to be worth 40 million instead of 20 million? Is that really going to make a difference for all these people who are in positions of power making these decisions? And the decision may come down, it really comes down to a lot of the time to, well, they never want, and that's what government stimulus has been about for 25 years. You don't want market forces, and you don't want there ever to be a downturn. Remember 2018, I mean, every time the market dips a little bit, there's the Fed to the rescue. Things didn't used to be like that 45 years ago. We had a recession every now and then. We had some tough times, which were corrective phases, right? We need to correct. Everyone can't be a multimillionaire. But the problem is you are creating a very divided society. And I was having this chat with somebody today. I said, you know what? Markets, and they were saying, you know what? Half the population is living paycheck to paycheck. They're wondering if they're going to be able to eat. Soup kitchens are full. And I said, the market doesn't care about that. The market cares about the people who are wealthy, who are sitting on house equity that's 80% higher than it was 5 years ago, on stocks at all-time highs. Asset holders are living like Caesar, while half the population is literally wondering if they're going to pay their rent and they're facing an eviction. Now, I'm probably exaggerating a little bit.
You're not exaggerating.
I'm not far from it.
Hans, you're not exaggerating. I can tell you, you are not exaggerating. That is exactly what's going on out there. And it's being like blatantly ignored. And it's a wild thing to see. It really is. And we could go on about this forever, but I do want to ask you, I want to circle the wagons back real quickly into two areas. I want to revisit the MSTR. So we talked about that being, and I agree with you. I mean, by definition, it is in fact a pyramid scheme. So, I mean, it really is, whether you like that or it feeds a pyramid scheme. It offers nothing but buying an asset, which then in turn elevates your price. So then you sell off some of your stock to rebuy that asset to keep raising the bid. It's a pyramid scheme. So question one that I'd love the answer to is, we have seen Bitcoin go from, I remember in 2018 when it was at 20,000, fell back down to 2,000. Then it went to 60,000, 60 something. Then it fell to 17. Now it's rallied almost to 100. So we have seen through the life of this thing over the last decade, falling 80% is not something it doesn't do. In fact, you would almost call it ordinary, which is what my second question is going to be about. What happens to MSTR or any other derivative financial product of Bitcoin when this thing falls back down to, say, 32,000, which would not be unreasonable given its cycle? If it reverses back to 32,000, what happens to those assets? And then also, you mentioned that people talking about 13 million in Bitcoin, which doesn't shock me. Every time I turn around, I hear another wild number.
Right. They keep raising it up. Yeah. It's like an
analyst. Right. It's going to be a million. We all go, oh no, it's not going to a million. Now they're saying 13 million. So that almost makes me laugh.
Well, it's like when Nvidia hits 130, the analysts go, well, now we're going to raise our target to 140. It hits 140. We're going to raise it to 150. Well, let's just keep playing that game forever.
And then they just say it's future earnings estimate. What'd you base that on?
Yeah.
Stock price.
Right.
I mean, so it's a funny driver.
Well, yeah. Then they go, well, it's multiple expansion. Look, it's in a multiple expansion part of the, the stock market, performance at this point, right? So, we used to live in a low valuation. Well, because interest rates are here and there, there's always some way to justify where prices are going. And so that's what's going on. It's tulip bulb mania a little bit. And they're saying, well, I'm sure the same thing happened in the early 1700s. They said, well, the tulip bulbs, they hit $5. Well, they're going to go to $6 next. And, but it's a bit like I joke about, it's sort of like George Costanza saying, if it isn't a lie, if you believe it. And so I think a lot of people have sort of kind of rearrange the way they think about things. And as you know, I believe, you start to believe it, that it's true, and it does become somewhat true. Like, there's no question that Bitcoin versus 10 years ago is completely different. We have institutional adoption. We have companies saying they're accepting Bitcoin. So at some point, just like we accept fiat currency, it's quite
We'll accept
possible that
it.
people just say, look, I accept Bitcoin. It's so ingrained. Why not?
Well, will they accept the consequence of, again, what would you say happens to these products if Bitcoin were to fall back down to
Well,
32,000,
they'll get decimated. I mean, an
decimated?
MSTR, it could drop 90%. I mean, right now it trades at a massive premium. It's like a closed-end fund, right? So and before this run, which I actually called at 130, I sold at 135. I sold it way too early. I put on a back spread, and I made 226%. And I look stupid because it went to 500%. And the same trade now, if I kept rolling, it would be up like 5,000%. So I got out too early, but then I rolled into coin, and I just kind of kept doing the hopscotch thing into different products. But before that, at 130, I think it was trading at a discount. I could be wrong. I don't want to.
Oh, I think you're right. I think
Yeah.
that's right. Before 130, I think it was trading at a discount. I remember.
Yeah. So now, right. So now it's commanding a big premium. And really, let's make no mistake. This is about, there's a squeeze going on. There's FOMO. There's people going, oh my gosh, I missed it at 200. I'm going to buy it at 400. And it's human nature. Fear and greed is playing into this. But I told people, I said, a few smart people I know said, if you own MSTR at 475, they said today, Mark Sebastian said, if you own MSTR, boy, you need to just get the heck out of this thing. And it dropped $100. Now, I put on a broken wing butterfly today, or yesterday morning. The spreads were terrible, but I put it in there and it finally triggered, and it went against me by $75. And I didn't sweat it for 1 second, because I knew that this may go to 600-700 for all I know, but it is going to crash hard. And it finally did. We went 550 down to 380, and I took it off. We doubled our money in one day. We have a community that people know about when they join the program. And we've had some incredible trades. And that was one of our quickest, easiest trades. I'm not saying it was easy, but it just happened. Well, so, it's ridiculous what's going on. It reminds me of the .com days. So, crazy.
So the funny thing is, the .com days, I went back and I did a whole series on the .com bubble and what we're going through right now. And I was trying to are we in that type of scenario? And the funny thing is, when people say we're in a different world, they're not lying. Because when I went back and I did kind of the bubble scenario then and the bubble scenario now, right now we're not in a bubble. And the reason we're technically not in a bubble is because of how the market is making these moves compared to back then. So back then, because it was equity driven, you're looking up all these companies with no earnings, but everybody's just buying, like just buying up. Right. Now, all the companies do actually have earnings. They do actually do things. The difference here is that people are piling into these options contracts and they're just bidding it through the roof. So earnings really have nothing to do with the driver of the price. And I remember I saw this. A lot of people think too that these have to be obscure stocks. And so I always go back and I say, wait a minute, it doesn't have to be obscure. It can be a real company. In fact, it can be a hot company like Tesla back in 2021. They don't have to be fake companies. They don't have to be AMCs that really don't have anywhere to really go, or GameStops that are probably done as a company. They can be real companies like Tesla. And with this type of behavior, it'll drive it parabolic, which brings me to my next question for you. We talked about Bitcoin going to 13 million. I have been warning people that think they want to eliminate the Fed. We want to eliminate the Federal Reserve. We don't want anyone in charge of inflation or currency in circulation. We think we can do it on our own. And what I always tell everyone is, one, humans will fail at that miserably, and it'll be the worst dystopian future you've ever seen in your life. But then two, I always point to what's going on in Bitcoin, because there are people up at the top, even though no one is admitting it, that hold most of the Bitcoin. It's not this giant crowd. There is a handful or a couple handfuls of people that really do control this coin. But technically, they don't have like a Fed Reserve that can push this currency around. But that's why the currency falls 80 and 90% of the time. So I've always said to everyone, I don't know how you expect to run a business, your life, an economy, or anything like that based on some currency that swings 80 and 90% the minute
No, you
someone's
can't.
fearful or greedy.
Yeah.
So
I guess
what I
the theory is that it's going to find stability at
what's the
some point, right?
reality?
The theory is that ultimately there's going to be this phase of like when the earth was created, there was chaos, there were things hitting the earth, there was fire, there were volcanoes, everything. Eventually things calmed down, and it happens to assets as well. It happens to gold, it happens to different instruments that are, that are new, that need to find their kind of kind of happy place. And so that takes time. So maybe there's something to this fact that, okay, maybe Bitcoin at some point just kind of is a lot more stable and we can suddenly use it as a currency of some sort. But we're pretty far from that, aren't we, at this point? I mean,
I don't see any way. I mean, for me, even looking out generations, I don't mean my lifetime even, but even looking out generations, I have a course that I do, and I believe the market's purely driven by emotion. Purely by emotion. I always tell everyone I'll talk fundamentals, and I do believe in macro fundamentals, and I do believe how that can drive markets, and it paints a beautiful picture. But when you start getting into companies, that is where you'll lose me, because I can show you companies like Krispy Kreme or GameStop or Tesla in 2021 or a million different companies that their fundamentals had nothing to do with it. Absolutely nothing. It was all
yeah,
cash flow, fear, and greed driven, right? So the thing that I've always, when it comes to Bitcoin, what I've been trying to rectify in my mind is, at what point are you going to keep people from being greedy in that market without any regulations? Or how do you stop the fear of this thing can go from 100,000 to 2,000? We've already seen it go from 20 to 2. We've seen it go from 60 to 17. In the thing that keeps the dollar in our economy running is the fact that people know the dollar's not going to go to zero, even though hypothetically we can discuss it all
yeah.
day long. It's never going to zero. And we know that because there is a backstop. And so the only real way to keep somebody from panic selling or really believing in something is to have this regulation, to have this backstop. So, I mean, would you agree with that or disagree?
I mean, I think we need laws. I think we need. I think that we would descend into chaos without. I mean, this is why the world. I mean, for most of us, I'm not saying there isn't. There aren't problems in the world. There are wars. We know there are issues, but we live in a much nicer world than we did in 500 years ago, where it was a lawless, effectively lawless world where you could be killed, you could be maimed, you could be harmed. So I think rules have a place, especially when it comes to kind of saving us from ourselves so that we live in a civilized society. I think there's definitely something to be said for that. But I mean, look, like this is America, right? I think we have created an environment where Bitcoin can go from $1 to $100,000, and it's buyer beware. And we are going to have bubbles, and the bubbles are going to pop, and a lot of people are going to get very, very hurt, and a lot of people will have made a lot of money. But this is the environment, and this is what we've come to accept. And the great possibility that we promise everybody is that you can make your fortune, and we allow markets to kind of do what they do, and they allow us to take part in it. And I think that's a wonderful thing. But things can get out of hand too. So I think, once in a while you need to kind of throw some water on the situation, make people understand. And in my community, I tell people, listen, be very, very careful with these things. This is not for, this is not an investment in a sense, but look, there are people out there who own Bitcoin, and they've been the smart ones, and they've owned it since $5,000, and they're smarter than me because they still own it at this point.
Yep.
So who am I to say that that's wrong?
Yeah, no, I would agree. So I love. I mean, I completely agree with everything that you just said. In this country, we have made it such that this can occur. I think for me, when I look at it, I think that right now, Bitcoin is highlighting the fact that our grandparents are living far better than than their grandkids. So in
Yeah.
some senses, it highlights kind of the problems of society in these assets, right? It's showing you. Over here, there's all this regulation. Over here, there's none. And these people are just running wild, running free. And there's a lot of people making money. But Hans, you know as well as I do that most of the people claiming they're making money, they're not making money. Most of the people that say, aside from the hyper intelligent people that started this stuff, that have a bias as to where it will really go, why it will go there, when it should probably get there, and the types of fluctuations they are going to create in the interim. Aside from them, people are jumping in and out and they're trading nonstop. When you look at the volume over there, I have a friend who runs a platform, a Bitcoin platform. All he does is run transaction. I mean, the guy's making $1 million a month doing nothing. It's like just transactions, really. Yeah, just transactions. And so when people say they're hodling, or this is just not happening, because what is being realized over there is exactly what goes on in the, we'll just call them traditional markets, which is, hey, get on the side of providing the chaos. Don't get involved in the chaos. So now you're seeing a shift from people that were working over here to now they're over there because there's no regulations. And so you're getting a lot of gold. I think what's happening is there's a lot more naivety over there, a lot more, pie in the sky. You're 23, you're going to go protest at college. It's like, these are all good things, but it's not how it's going to work out. And that's what I see. Though I will say I am a fan of Bitcoin. I like it. I like the possibility that it creates, but I, like you, think that we're far from that possibility being a reality. I mean, you don't have to change the way that Bitcoin is valued. I understand that, but there has to be some level of handcuffs as to what you can do, how much you can buy and sell, how much you can push, how much supply you're allowed to just push out at one time. And right now, when you see the stuff going on over there, I don't touch it. I'll be the first to say I don't touch it. It looks so controlled to me. I just don't. I stay out of it. I'm like,
it's a little bit Wild West. You're right. It's a little Wild West. I'd say, I'd say to people out there, I'd say, look, don't be afraid. I mean, don't scream at me when it goes to $1 million, but don't ever be afraid to take a little bit of money off the table. Put a little, cash in your jeans now and then. If you've been fortunate and you've been patient, you've been smart about it. Just understand that this is not your dad's market, right? There is some crazy stuff going on out there. Let me blow your mind here, Derek. If you think about it, so we talked about gamma squeezes earlier. So think about this. Now you're creating options on Bitcoin. A more durable version of that. So you've got the situation where, say you have a squeeze on something like a GME or a Mara or whatever it is out there. Well, guess what? You can squeeze something, but the company can create more of that, right? They can come out, create more stock, create more supply. Bitcoin is one interesting thing where there are 21 million of them, and that's it. And they're somewhat difficult to accumulate over time. You can, in theory, create. I don't know what they're going to do about this, because if you don't limit the number of derivatives that you make available, you could create, in theory, a size squeeze that could involve literally some sort. We don't even know what limit up is, but there will be nothing for sale. You're creating potential upside gamma exposure where people need to scramble to get in, where there could, in theory, be zero supply at some point. There could be no supply. I can issue more GME. I cannot issue more Bitcoin beyond a certain point. So if Bitcoin is worth, let's say the total amount of Bitcoin is 1,000 of them, and I create derivatives exposure worth, to the tune of, thousands of times that notional, what happens when this squeeze happens? So, you could in theory see a situation where it's literally could go to infinity. I mean, it's craziness. It's craziness.
Yeah. I get it. You're right. I see it. It really, really could. But so if Bitcoin did this, you have to be able to like right now to use Bitcoin, you basically have to put it into a currency. All right, there's wallets, there's certain people that you can use Bitcoin to buy and sell with. But if Bitcoin goes to, like, who cares what number? 100 million. Bitcoin goes to 100 million, right? It's way up here. At some point, it can't be worth 100 million simply because what do you do with it? Like, so if
it can't be worth
Right.
millions of times the what global GDP is worth, right? Like at some point, it's like, you remember years ago, it was like Porsche versus Volkswagen, and it was like there was, it didn't make sense because one was worth more than 10 times the other one, even though it owned, it was mathematically impossible. So we
Right.
may get into this kind of situation where maybe we need a quantum computer to figure this stuff out, because it's going
I
to
was
be
gonna say, what do
insane.
you? Yeah, yeah. What do you do? Actually, you
Yeah,
just blew my mind, like you said you were going to. And now I'm
yeah.
going. Wait, what do you do with it? It
No, you're going to need a
almost
quantum computer that says, well, the cat is both inside the box and outside the box at the same time. And I'm
a
going, well, how
hundred.
the heck is that going to happen? Well, the quantum computer knows how it happens. I'm like, okay, I guess I'll have to trust you that the quantum computer knows how that works. But this is
Right.
what Bitcoin could happen. This is what could happen with Bitcoin in a sense.
That
Like,
is so. That never even crossed my mind. I never thought about it before, but that's such an interesting thing because now what you have is an asset worth $100 million that is worthless,
well,
right?
at some point, it breaks the laws of
It's just it doesn't.
physics and mathematics, right? Like what happens to
Yeah, no.
we have right now, we have listed markets where the OCC is, even in the 2008, even in the depths of when we thought literally the plumbing of the financial system was under threat, right? That's what
Oh
things were
yeah,
like in those days. We literally wondered if
I
the
was there.
system was going to grind to a halt, right? We were
I
there, we saw this, and we could feel that palpable fear that, well, what
Yeah.
if things just stop working? But they didn't. Everyone was made whole. Now, of course, the government's made sure of that. The Fed made sure of that everyone was made whole on their contract. If I had a call contract, a put contract, any kind of derivatives contract, they were all made whole.
Yep.
What if we get to a scenario where it's not possible to make people whole? It just doesn't. The math doesn't fit anymore. 2 plus
I
2
don't know.
does not equal 4 anymore. So, like, I don't know what
I
happens.
don't know what that means. I know. I mean, well, now that you posed the question, I have no idea. Believe me, there's a lot happening over here right now, and I have
Right.
no idea of the answer because you stop. It stopped. I don't know what you do with it. I don't know. I don't know what happens. I don't think the quantum
Yeah.
computer knows either because, from what I understand, the cat is inside the box and also outside the box, but don't open the box. Which, so I don't know if the quantum computer
It'll
knows
be
it.
like Raiders of the Lost Ark when they open
Right,
the Ark and their faces melt. Like, it
right.
might literally be like that, right? Remember that?
I do, 100%,
Like,
100%. And
face melted.
that's so funny. That's a great visual, and also it just happened to me. You just couldn't
Yeah.
see it.
Yeah. It both happened and didn't happen.
It didn't happen.
We're in the quantum world right now, I think. Just talking about
Exactly.
this. We've
For
crossed
those of you
over somehow, right?
watching, it didn't happen. For those of you not watching, it in fact did happen. You
Oh my
just weren't
God.
here to see it.
All right.
Um,
Mind blown. Mind
but
blown.
it is. Poof. It is true. Oh, Hans, that's great. Let's one more thing. So I want you to just state your opinion. There's a lot of people out there talking about, eliminating the Fed and because they don't want to be bound by someone else controlling currency. I just want give me your outlook. I've given mine plenty. What is your outlook? If for some, and I don't even know how this would be done, to be honest. I don't think most people understand how auctions work and how the Fed works. But let's just break it down to its simplest kind of form, which is the Fed controls money supply, which in turn controls inflation. And you have a large group of young people that really do believe they would like to eliminate the Fed. Share with me what you think the world would look like if that happened, and then any possibility you think of that happening.
Well, I can't blame young people for being disenchanted, right? And I mean, look, the Fed controls money supply, but as we know, money supply doesn't get controlled. Quite frankly, we saw, and that's when Bitcoin started going again. We kind of broke out on that M2 money supply, and things started. That's when MSTR started at 135 recently. And look, so I don't know what happens. Who comes out with the pitchforks at some point? What do we have a French Revolution at some point where half the population that can't eat is fed up with, and now you've got AI taking jobs, and everyone's going, well, don't worry about it because it's like agriculture 100 years ago. Everybody found other jobs. I don't think so. I don't think that's the
No,
same thing at all. You're not going to
it's not the
retrain.
same thing.
No, it's not the same thing. They're completely out to lunch. I hope I'm wrong on that.
You're
This is
not.
happening it's too fast. And I think that is going to be the next few years of disillusionment for young people as well. So at some point, it's just getting harder and harder for young people. Now, are they set to inherit a great amount of wealth? Okay, so there's going to be a certain amount of, number of people who are in that position, but there are a lot of people who are not in that position, that they're going to inherit this wealth from their parents. And so I think I think we're running into very difficult times, and the cards are all held by the older people in society and in government who call all the shots. And frankly, they call all the shots that benefit their 401ks and benefit their asset prices. They do what's best for them in the end. And on the other hand, they kind of know what keeps the economy running. It's the greatest economy in the world, and the greatest tech companies and all that. And so you can't discount the fact that they're kind of doing things right in some ways, but we're really dropping the ball in other ways. Can you get rid of the Fed? I don't know. Look, I'm not an expert in all of these things necessarily that we're talking about. I just play an expert on TV. But I know options, I know manias, and I've seen a few manias in my time because I've been around since sort of the mid 90s, and I've seen a number of bull and bear markets, and literally markets go poof. And so I kind of have that experience that I bring to my members, to people who take my courses and are in my community. And I'm glad to help people out with that sort of wisdom. But there are a lot of people who've never seen a difficult moment in the last few years. A lot of so-called experts out there in the option space that are experts because they made a bit of money over the last couple of years of bull market.
Well, just be fair, it hasn't been that hard. It hasn't been that hard. I say for anybody who started in markets 2010 through now, you don't know hard yet. You haven't done it. You don't. I'm sorry, you don't. We've been bailed out by the Fed consistently. We're not allowed to have dips right now. Well, so let's end on this. One, are we in your mind? Are we in a mania right now?
I don't think so. I think overall, I mean, you look at some of the valuations out there. You made the point earlier about the .coms. I mean, that was truly crazy. 2021 was a little nuts. We got, Square was, companies that were 400 or 500 PE. I think we're in a different world. NVIDIA is frankly not that expensive. Now, does the AI, it's not a bubble, but does the AI bubble or balloon deflate at some point when all the hyperscalers can't afford to, or they can always afford it, but they'll stop spending? Look, I think that's in flux, but that's an ongoing story. But if you look around, and one thing I've been happy about is that you're seeing a broadening. And so this week I said, you know what, NVIDIA is big, but it's not that big. It would have been big 5 months ago, before the market broadened out and started to focus a little bit more on cyclical, on other areas, rather than just kind of secular AI-driven craziness, which was the year and a half before that. So I'm happy to see areas come back to life. You look at even small caps trading at like 10 times earnings. There's a good portion of the market that's not that expensive. And I think people forget that. They give you that top line, the market is too expensive, 21 times forward earnings, whatever it is. There are a lot of good pockets in there. Maybe this is becoming a stock picker's market, maybe not. And we're seeing, did you notice the last few days, like Mag 7 is struggling a little bit as a lot of other things are going. And that kind of fits into my sort of roaring 20s argument, which I'm borrowing a little bit from Ed Yardeni, but I've been talking about that for many months, just saying, listen, it might be a little bit of hopscotch. The rest of the market goes, then they go, oh wait, MAG are important again, and they're not that expensive. Then they go, and then it's one of these.
That's what I've seen, Hans. I completely agree. I have seen the exact same thing. I've been talking about it. We switched from, so the S&P's kind of been running the middle, but we've gone between the NASDAQ, so the MAG 7, and the Dow with the financials and energy. We've been doing that for the last 2 years, right? So up until this year, MAG 7 has really run everything. But as of July 11th of this year, it's really been energy and financials that have been the consistent movers in the upward direction. Whereas like MAG 7, I mean, I don't even think they did break through those July 11th highs, but I think they're back below them already. Whereas like if you look at the Dow, that's not the case. And I'm using big indexes as opposed to sectors just because it simplifies the conversation. Like
Microsoft's gone sideways, right? Microsoft sideways, Google sideways, Amazon's pushing a little bit higher, but it's not expensive. It's one of my favorite names. But yeah, it's been kind of a little lackluster in general. But I told people, I tweeted 3 months ago, I said, listen, look around. It's a big world out there. Don't get stuck in one thing. I see, people who are new to it and they get stuck trading semiconductors, and then they get kind of rolled over when that's the only thing they can focus on. Be versatile, look around, trade different stocks, trade different industries, because there's always something interesting going on. So if you have that skill to be able to look around, it's not that hard.
Great advice.
Check out a scanner. You look at a scanner, just look at what sectors happen to be outperforming. Do a relative performance. What's doing well versus the SPY? Oh, maybe I should look into those stocks. So there's always something going on. Like Jim Cramer, there's always a bull market somewhere. So there's always fun to be had. So look around.
I agree. And I don't see myself, I hear a lot of people talking about fear, because if you look in the economy, there are some really scary things. I think AI is to our detriment. I don't even know how that all irons out. I don't even know how it all irons out, but I think it's to our detriment. I think real estate right now has a lot of problems. So AI is affecting the job market. Real estate is affecting people's ability just to feel good, right? Like that American dream. It right now feels lost. That's not a great thing for morality.
No.
And then
our house and the picket fence, the white picket fence and all that. What happened to that dream? It's getting destroyed for a lot of people. Yeah.
It really right now is. And I think that that's a terrible morale issue. So I don't think that that's good. But I will also agree that, look, when I look, I'm a big believer in cash flow, technicals, and volume. And if you're going to have a massive, a correction that is a recession based on some macroeconomic factor, what you're going to see is large institutions selling, and that shows up as volume. Oh, did we lose you, Hans?
Oh, where am I?
I don't know. You went green.
Oh, did I go green?
It's the color of money, so it's not bad.
Am I back on yet?
No, there you are. You're back. Hey, listen, you were just the color of money.
Okay.
It's fine. That was the best pitch for your courses ever. So I think that volume has to step in. We're looking at these high prices, and a lot of people are saying, "Hey, what happened in the last election? How did that finish coming into December 2020, where I saw the first week of December volume spiked up 500% in that first week, and then it just continued. And I knew that we had something in front of us. Right now, I don't see anything. I don't see any increase. There is some daily volume creeping in, which sometimes will transition into weekly volume. And that's what I look for major recessions. Anything that's going to drive a market down 20 to 50%. I don't see that now. So I don't have the breaker worry lights on. I'm aware of all of these factors, right? And thankfully, I listen to a lot of smart guys like yourself who give me new ideas. But I think you gave the best advice in the world, which is don't get stuck. Even right now, a lot of people are stuck in crypto. Don't get stuck in crypto. Don't get stuck in semiconductors. Don't get stuck in AI. A lot of people ignored energy. A lot of people ignored GE as it's had a 500% run in the last 6 months because it's GE. Who looks at that? Right? But if you pull it up, there was something there. You could have made a lot of very easy money doing that. So Hans, I want to thank you for joining me. I kept you for an hour. I try not to do that. I'm a big talker and I love doing this. So
my
I'm
pleasure.
gonna let you leave us with your Crush the Premium course and what you're doing for Black Friday and your sale. And so go ahead and give it to the audience so that they can jump over there and start learning about options with you and trade this stuff appropriately, reducing their risk.
Well, yeah, come check it out. So my whole delivery, as I started to get into earlier, is I think of things very much from a risk perspective. So everything I teach is about pillars. We start with fundamentals, but then we get into technicals, we get into options edge. And it really comes from somebody who's done this. I managed $1 billion in option strategies. I've generated $750 million in options premium. So I understand income, but also other strategies. We're doing back spreads. We're doing this plain stuff, covered calls, cash secured puts, but there's so much more to it, to our earlier point, which is you need to be able to pivot, because in the options world, it's multidimensional. And there are times where you want to focus on one thing, and then there are times where you want to find edge in other places. So that's what we like to look into. We've got a community that you can join. There's some courses that are fairly reasonable to get into, as you can see on the screen here. And we love options, and I teach them from a market maker's perspective. Students are always kind of going, Hans, what you just talked about, you kind of throw out there like it's nothing, but I'm taking notes all the time. So I kind of take for granted that those years of having done this and the wisdom, I guess, that I'd like to think comes with it. And I try to inject that into everything I do. So we'd love for everybody to come check it out. I've even got some free courses. I've got a free ebook. I've got stuff that you can just kind of dip your toe into. It doesn't cost you anything. And just to get a little feel for what we do on our side. And we'd love to have you.
Awesome. Hans, thank you so much for your time today. I greatly appreciate it. I know everyone else did. It was great to finally meet. We will definitely do this again. For anyone out there that is looking to learn about option strategies and get tips on what you can be doing right now, when to do it, and how to do it, there's an amazing community over there with Hans. Take advantage of it. Thank you all so much. And remember, everybody, every day above ground is a good day. Make the most of it. Thanks, Hans.
Thanks, Derek. Thanks so much for having me. See you,
You're
everybody.
very welcome.